I want to go ahead and get started on just something quick because I feel like a lot of people are trying to complicate the process of learning how to trade, and it does not have to be complicated. People are making it way too complicated. You're making it way too complicated. So this is for you. This is only for you. One of the easiest ways that I have seen so far in my 6 years of doing this to get into the markets to help make trading decisions and then actually get the experience. Because no matter what you're doing, the experience is what the driving factor is. Without the experience, you're not going to be profitable. So you have to get the experience. The problem that people generally run into is we complicate it, we try to overanalyze it, we try to find the perfect something. Tori Trades is one that I have come across. She does trend lines. It is beautiful the way it's just simplistic. Now it's not hers. She learned it from her uncle, and he taught her. And basically, it's like this is all you need, and that's all she trades. All you need is trend lines, and it doesn't have to be that complicated. The beauty of trend lines, in comparison to support and resistance, or ICT, money market, the beauty of the trend lines and the way that it's structured is it is very, very easy to analyze the charts. And the entry reason is very, very simple. And the trade management is also very, very simple. So the only thing that you have to work with is discipline, consistency, and maybe a little bit of risk management, to see what your risk tolerance is. So I'm briefly going to run over what that looks like. And this, if you want something simple to start out with, this is it. And from here, once you get this under your belt and you get the experience, you'll start seeing certain other things. Maybe some other concepts will start applying, and you can see if it has any sort of bearing on your profitability. And then you're just making your own. Because no matter what, no matter which strategy you're taking in, no matter what you're doing, you're going to end up making it your own. Everyone looks at the market differently. They bring in their own biases, their own experiences, their own values, their own risk tolerance. And so even if you learned it from somebody else, you're going to have something different. So we're going to start, and I just want you to understand we're starting here. I'm going to use USD but this works on anything that has candlesticks to it. Anything that has candlesticks. I've come across some people who've used what is it, the Heineken Ash? Yeah, yeah, this one. They've used that one in the same sort of scenario. So it's simple, it's easy. Let's get into it first. So I'm going to just type up the simple rules. So you start with your higher time frame. You want to start with the monthly and then move down to the weekly, the daily, and you're going to continue going all the way down until you get to your trading time frame. The 4 hour is where I generally stay, but we're gonna go down to the 1 hour, and maybe we'll stay at the 30 minute. Actually, because people are like, no, I want to trade, I want to get in, and I want to get out. We're gonna go down the 5 minute, or the 15 minute. This is how we'll mark up. We'll mark up everything all the way down to the 15 minute, and the marking up process is the same. You start with high points, low points, and you're connecting them into the point where price does not cross them at all. That is the hard line you just need to draw and start with. As you get more experience, you might tweak that a little bit, but to just keep it simple and consistent, because that's the key to come back to the markets day in and day out to stay consistent. Just imagine you're standing outside of your neighborhood, you have a clipboard and a piece of paper, and you are writing down every morning from 5:30 in the morning until 3 o'clock in the afternoon. You're writing down the vehicles you see. Maybe you'll take down the color. Maybe you'll take down the driver gender. Maybe you'll actually know some of these people by name, and you'll write down the times that you see them. You'll write down which direction they go. If you did that day in and day out for, I don't know, let's say a month, 2 months, you would notice patterns. you'd start to be able to make predictions based upon your experience because you were consistent on doing exactly what I just said you'd be doing. The same thing applies to the market. If you can find a way to be consistent, to come to the market consistently, you will start to notice patterns. Those patterns start to develop and give you a feeling about what you think is going to happen next. And that is experience, that's intuition. So that is what you need to build. Just about any strategy works. The problem is a lot of strategies are very, very subjective. This one sort of removes a lot of subjectivity to it. So I really grasp on this one for new people who want to learn because you're removing subjectivity. It's just removing subjectivity. You actually get to start executing trades and getting the experience watching and looking for certain things instead of trying to figure out if this is the right support resistance zone. Is this the right order block? Is this the right candle structure? Is this a head and shoulders? Is this a double top, a double bottom? You don't, it's very, very simple and it helps cut some of that stuff out. So let's get started. Like I said, we're going to start on the higher time frame. The highest one we have, well, it's not the highest one, but it's one of the ones that you actually can see some stuff. You know what? We might actually have to, no. I was going to say we're going to skip USD JPY because I realized we've met some all-time highs in the last month or so, last 2 months, I guess. But no, we're going to stick with this. The way it would work is we would have a high someplace that we would use to mirror up with the next high. We don't have one of those yet. So if you don't have one, you don't draw one. The beauty of this, once again, as well, is this helps work on your patience because you have hard rules that you need to follow, at least to draw what you're marking up on the charts and what you're waiting on. And so if you can't do something like draw a downtrend line because you don't have a high point and then a point to connect to it, you need at least 2 points to draw a trend line. That's the rules. And price can't intersect them. That's the other rule. Okay, well, I don't have 2 points to draw a downtrend line. I have nothing higher and nothing, and all I have is something low. So nothing here on the monthly time frame. Uptrend. We would start with the lowest point and we would move price until it could not intersect it. So that is about as clean as I'm going to get. I'll move this a little bit closer to where that's at. Now, the rule that you are going to, when you continue drawing trend lines, point A's, point B's, C, D's, E's, F, whatever, you ignore all those because it's the last point that you want. So if for some reason this was tagging this all along this entire time, it's that last point that you want. That'll be your starting point, your point A for the next trend line. So we have a point A here. That's the lowest point. This is the last point before price actually crosses it. And now we are nowhere near it. We're not touching it. So we would draw another one from this direction here all the way up to this one. And we can do that again. We can start here and we can draw, looks like we're probably about where price is right now. That's probably where we would be, is right about here. Now, as we move down the time frames, this is sort of when we start shoring stuff up to make sure it touches price and how that looks. So we're on the monthly. We're going to move down to the weekly. We have no downtrends we can draw. These are all bearish candles. There's no pullback. There's no point B to actually to use. So the more you do it, the more you'll start seeing what you can and can't connect. Weekly, we drop down. Now we can clean some stuff up. All this stuff back here, not really concerned with. It's where are we at, where price is at now. What is our last line I drew? It's this one right here. And so we look at this one, and that is pretty much it. By all technicality, it should be this one here. And then from here, you come across, and it would have been this one, but then that one crossed. So you actually have to come directly to current price, which would be here. Now, that is that on the weekly. We still don't have anything on the downside because even if you were to draw a really, really steep line, you would have already crossed it. You could possibly have something there. That would be it. It's a really steep line though. And the more you do it, the more you realize you'll get a feel for the instrument and how steep the lines can be before you start getting fake outs here and there. That all comes with experience though. If this is what you see, draw it because experience, time in the market doing this over and over again, if you see that it works for you, then guess what? you should continue doing it. If you see that it doesn't work for you, guess what? You should probably stop doing it. So the market will teach you. This is just a framework, a foundation for you to start with. So now we're further down here. We have price currently where it's at there, and we'd have to clean up this guy. It starts up there and goes there. By all technicality, we'd have to be very, very careful. Yep, I guess technically, this is the high. It would come here to there before it crossed. This would come there. And that's if you wanted to be very, very precise. It doesn't have to be that precise. Once you have these lines, all you're waiting on now is a break and close. So, well, we're on the daily. So actually we're still going down. We're going down a whole lot more time frames. So let's keep going. The 4 hour. Now we're once again, we're just shoring up stuff, making sure they look nice and clean from where we started. There we go. We got this one right here. That's on the 4 hour. We can come a little bit closer, and you can see here from the 4 hour, we can start here on this point. There's a point right there. We can start from here and come down here. We have nothing on the upper side, so we'll leave this where it's at, and we'll drop down to, I think we're supposed to go to the hourly. All right, now we're down on the hourly. What are we doing? Same exact thing. There's that point there. We have another point from here to here. And price has come up and started printing a bearish candle. Granted, the market's closed right now, so Sunday may open and you may gap up someplace. It's okay. For marking purposes, we're going to do it. We're going to take this one and we're going to mark it roughly about there. We still have nothing on the uptrend side that we can draw. These have all been downtrend lines. That's cool. We'll drop down to 30 minutes, see if anything clears up. 30 minutes probably could be ignored because the 1 hour is close enough. And then we also know we're going to go down to the 15 minutes just because that's where I said we're going to go. So like this can be cleaned up a little bit more. That's the lowest point. I would have to really zoom in here to, yep. So that's the last point right there that price came through. And this would be it. If we were trading the 15 minutes, come Sunday at 5 p.m. Eastern Standard Time, we come to the markets. We'd either have alerts set or anything like that, or who knows, Sunday when the market's open, spreads are crazy, gaps happen. You might want to wait until later on the evening time to actually come see if you need to change any lines. Maybe it gapped down here and it's just hovering down here. You don't know, but everything's mapped out now. So let's take for instance, how would this really work? We're going to go back into replay mode. We're going to come here. So we are going to hop out to the 4 hour and see if we can redraw some stuff based upon the 4 hour. Okay, here's what we got. This is where price would have been. These ones don't exist. That is also where price would have been. Currently, we started getting a pullback. We'll see what that looks like. We're going to go down to the 60 minute, clean things up. All right, this needs to come down here a little bit farther. And we actually have some uptrend structure here. So, nope, stop that. And you're dying on me. Okay, cool. Really? You are all up in my way. Here we go. There to there. All right, that's that. We would drop down to the 15 minutes. We're going to ignore the 30 because everything's really, really close on the 30. And we come down to the 15 minute anyway and can clean things up. So we'll leave that where it is. All right, so we'll shore up everything here. Current price, this is where price is currently at right now. I don't know if everything would look clean. You could do something if you wanted to. Price had come down twice with 2 bearish candles and it looks like it's coming back up. This would be a really, really close call. But if you feel comfortable doing it, do it. If you don't feel comfortable doing it, don't do it. If you're like, oh, I don't know if I feel comfortable or not. Okay, do it anyway. Then you'll start learning comfortability on it. So the idea being, we have 2 trend lines. Tori calls them 2 different things based upon the action that happens. Once one is broken and closed beyond, that line becomes your action line. It's telling you what to do. If this breaks and closes below it, you're taking a sell. The action is a sell. If it breaks and closes above this one, you're taking a buy. The action is a buy. The other line becomes your safety line. What do you call a safety line? That's more like a stop loss, but it's like a trailing stop loss. As price moves in your direction or against you, it is your stop is going to trail along with it as the candles move. Now, granted, you could get a huge spike and it might just immediately knock you out, but that happens. It's part of playing the game. It's okay. So this is where we're at right now. We would be waiting for a break and close. Now, the real subjectivity comes in regards to the break and close. Once the candle breaks and closes, you have to ask yourself, does the way that this candle broke and closed, does it convince me that it's actually broken and closed, or maybe I need to readjust my line just a little bit more? That's a question that you've got to ask yourself. That's also a question that will be answered as you get experience doing it. Even if you were to not take the trade, you would have in your mind noticed how that played out when you had to readjust your lines. Somewhere in your gut, eventually you would get a feeling that this actually is going to work out. I should take this trade. Others, you may get ones that you're like, yeah, this closing broke and I'm feeling good. I'm going to take it. You will see that over and over again, and whether or not it works for you or it doesn't will help guide your future decision making. So we're going to move the bar forward. We're going to move the bar forward. We have so it's like when the candle printed, it looked like it was going to close it, but we wait. We wait on the 15 minutes. So every 15 minutes, we're waiting for a close. So every on the hour, every on the 15, on the every half an hour, and every 45 minutes, we're coming back. So now we've had price play in here. We're going to readjust a little bit. Cool. Next one. All right. Played a little bit more. Didn't close. It could work out now. Price may still fall from here, but we have not had a close on the other side of this trend line that is giving me any confidence at all right now that things have moved. Next one. Price comes up. Both of those would have told you to take a sell, and it would have gone against you. Granted, your stop loss would still be up here, so you'd still be in the trade, but this would play with your emotions. And so patience. Let's wait. Let's see what happens. All right. Now we have a break above. Okay. This is what we're going to do. We would take the trade. Now, this is where this looks like right here. The stop goes on the other side of this safety line. This safety line, I'm going to go ahead and create a new color that is orange. This is our action line. Now that this has been broken, we don't care about it. The whole purpose of this line right here was just to tell us when to take a trade. It's told us that now. It's kind of useless. The one that matters is this one. As long as price stays above this one, we're going to stay in this trade. Once price breaks this one, depending on how it breaks and what we get, we may flip our bias. We may flip our position. So we're in a buy right now. We have no take profit because our safety line is going to be the one that tells us when to get out of a trade, and we will just see where that goes. So we go up, it comes down. Oh no, we might be losing money. Oh no, oh goodness gracious, we might be really losing money. Okay, what is it going to do? Oh, it broke. Oh, nope, hasn't broke yet. Okay, cool. It hasn't broke yet. Safety line still intact. We're going to leave it there for right now. What do we got? Next candle. Next candle has broken the safety line. Is it convincing? No, it's not convincing for me. I might give one more candle just to see what happens. One more candle. Okay, we're still above here. I'm still going to stay in for a little bit. We'll see. One more candle. Okay, maybe we needed to give it a little bit more breathing room. That's fine. We're going to see. Let's keep going. All right. Well, now it's getting iffy. Now I am probably going to go ahead and close it. We've broken out of here a couple of different times. We've come back up, looked like we were going to pop back into it, and now we've come across and it's coming down again. So I would close there. Minor loss. This is a minor loss. We would have lost out of 500 or 51 pips. We would have closed it at 39. So I don't know how to keep track of that. We'll see. We have 39 out of 51. Pretty sure that's some sort of percentage, right? We can do that. Is that how that works? I don't know. We'll see. Let's see. I have a calculator up here, bringing it down. 39 divided by 51, 76%. So that was a 77% loss of whatever you were risking. You didn't take a full loss, but you still took a loss. So first trade was a 77% loss. Cool. That's what we got. Let's just go with that. All right. I am now a little bit more convinced. Now we're going to readjust our lines. This is no longer valid. It was part of our safety line. This was our action line that we're ignoring. I just didn't delete it off the chart. Now I'm redrawing because this is our new downtrend line that is yet to be broken. We have this line here, and now we have, well, we had this action line. Okay, yeah. So this is my safety lines become my action line. It's telling me to take a sell. So I'm going to change this back to red. This is now my safety line. And you don't have to change colors, but I'm just trying to keep it consistent. So stop loss above here. And as long as price stays underneath this, we are going to stay into the trade. So here we go. Let's go. Okay, coming back up. I mean, this is the emotions you got to play with, right? You're already in drawdown. You already just lost a trade. If you were at $100 per trade, you lost $77, and you're back into this trade with another $100, and it's almost $50 against you. Oh my goodness gracious! Oh, we're back at break even. Maybe we should go ahead and close it now and just give up. I'm just going to go ahead and put all my money into a savings account and just earn 0.01% interest because the emotions are just crazy. Oh wait, actually, hold on. Maybe I feel, you know what? Maybe I can make this work. I might be able to do it. So yeah, you know what? Yeah, I'm good at this. Now remember, we don't have a take profit. It's here, but we don't have one. Like I don't want to get rid of it, but we'll get rid of it. That's our stop loss. We have a safety line here. Cool. What we've also done now, so management. The beauty of the safety lines is that it's a trailing stop. Now, if you look at the context of the market and you go, you know what? It's going into the favor. We're good to go. If everything were to pull back, I would hate to lose. What are we at? I would hate to lose, and hate's a strong word, but I'm going to use that as it is. We were at one point in time, we were 1.5 our risk or 1.5 our reward. So if we risked $100, we'd be up $150. We'd already make up this right here. It would hurt for it to come all the way back and then still peg us out. So what you can do is as the price moves, you have to look at the context. Prices started pulling away. It's far enough away. It's also created, what do we say? You need a point A and a point B. It's created some of those. It created one there, but then it also, remember, it's the latest point, that one that matters. And look how nicely it's respecting that. Now, what we've done is we got into a trade. This was our original stop loss was way up here. Now this is our new safety line. As long as price stays below this one, what seems to be a strong downtrend, we'll go ahead and try to capture whatever this is going to give us. Currently, unless price immediately pulled back right now, all the way back up here, and really close, which is possible. It could do that. Currently, we were almost trailing our stop loss in profit. So this is almost a risk-free trade. As we continue moving, we'll see how this goes, but it's almost a risk-free trade. So let's see where we're going. Price is pulling back. Of course, we might, oh my goodness, we might lose this one. I should have pulled out eventually. Oh, I should have pulled out earlier. Look how close it's coming down. Oh no. Oh, gee, okay, it didn't close, but is it going to close? Oh, yeah. Oh man, look at that wick. What do I do with that? Let's see what the next candle does. We're not getting anything strong. Oh man. You know what? Maybe it'll go. Okay. Okay. That's it. I'll close it there. All right. We closed that one. That's that like that. I mean, that's convincing for me, right? I mean, look at that candle. That candle closed hard across that line. This one, maybe I need to adjust a little bit. It didn't close above it. This one, even with the adjustment, I can't handle. That's it. That's it. So we close that one. Close it. What do we get out of that? We are at 10 out of 43. Where's my calculator? So, no, how'd that work? How would that work? Hmm, how would that, how would you figure that out? Um, yeah. And let's see what that looks like. 23%. You have a 23% gain. Would that be right? That doesn't seem right. If we risk, that says $100 JPY. Risk $100, we would have made 166. That doesn't seem right either. Yeah, no, okay. Okay, but let's call it break even. Let's say we didn't spreads, fees, commissions, whatever. We didn't even get anything there. Okay, cool. We didn't get anything. Let's keep going. What do we got? I'm gonna clean this up. Gonna readjust a little bit. We got this one here. We come down here now. Yep, that one matches that one. This one's that one. We'll draw this one here. I can actually draw one here as well. And now we got all these wonderful colors that they all just look beautiful. We don't even know what's doing what. That's fine. Okay, so this is where we're at. Cool. Let's see what happens. All right. That broke. I broke that one. That's solid. I'll take that. And this is what you're doing. You're just doing it over and over and over again. You're just taking the trades over and over and over again. There's a stop loss. It does go below there. And keep going. Okay. Yeah. But yeah, that one closes out. All right. Yeah, flip bias. What do we got? We got this one here. This one actually closed. We readjusted our safety line. That one goes there. And we'll see where this one takes us. Where are you going? Can we get a new safety line? Okay, we got a new safety line. What do we got? Let's take, where's my safety? There we go. We got a new safety line. All right, can we stay below it? All right, that was a break there. So that would have been our win right there. So we lost 75% of one, or 77% of one. We lost a full one. We broke even on one. Did we lose another one? And this is a 1-3. So depending on whether or not we actually lost another one and how much that actually was, we either could be up a little bit or right around break even. But this is it. You just do it over and over and over again. Because this is what you're waiting on. You're waiting on these moves like this that just give you the move you're trying to get with the trend. And so, maybe you look at this and you go, yes, but whenever I've seen a strong candle close, I notice that I need to give it another candle because sometimes you'll have a break back in. Now, granted, we already see it the next candle does follow back through, but maybe you've seen this repeatedly over and over again with how you've drawn your lines, and you just see it happen repeatedly over and over again. And you can look back over your trading journal and you see how often it works. And you're like, you know what? One more candle. This happens. Okay, cool. We're still going to stay in the trade. I'll readjust my lines to account for what price is done now. and we're still in this trade. Where are we going? Still coming down. Okay, wait. There's our one more candle. Didn't go higher. Do we got another one? That one's it. Okay, now we're out again. Cool. A little bit less than we were before, but we had some profit. Now, I don't know. Maybe you could have been like, that's actually a trend line, from higher up. Maybe we're just going to use that as a target. I don't know. You don't know either. We're looking at this and seeing, yeah, price rejected us a few times. Maybe that's a good place to take targets. Well, yeah, we're seeing that now because it worked out. But you're probably going to see very often it'll smash through this thing and continue going. And then you would kick yourself if you took targets there and it ended up going 4, 5, 6 more times your distance. You would kick yourself. But you don't know because you haven't done the back testing. You haven't done the forward testing to see how often this works out for you. I have, and things have been going really well for me. I have a small account, started with $50. I'm up to 72 right now. And this is the style that I've been trading, is roughly everything that I just pointed out right here. So do I know that it's profitable? Yes. Does it take some doing in order to make sure you stay consistent with it? Yes. Is it outside the realm of possibility? Not at all. I work a 9 to 5. I have a family. I have a second job ish, and I trade the 4 hour. And so sometimes I find myself in 5, 6, 7 trades. Other times I will find myself in none. And finding out how to deal with patience, how to deal with fear, how to deal with greed, that's truly what will make or break you. The strategy by itself, strategies don't make or break a trader, because it's pretty simple to find an edge in the market enough that you can be successful over a long, over a group of trades, over a big group of trades, long period of time. It's not that hard to find an edge. There's edges all over the place, and some of them make sense, some of them don't, but it doesn't really matter, because if you can find a way to be profitable, who cares? Just do it. What's going to kill you is psychology. That's where it's going to be. And so sticking with something as simple as this and starting here can allow you to focus on dealing with that psychology. It takes a whole lot of decision making out, and then you can actually just experience what it is like to be in trades. So go try this out for yourself. If you want, my Discord is open. You are welcome to come join. I would recommend that you try something out first before you do. I would recommend that you have a trading journal. That way, even if it's not this strategy, if you have a strategy you've been trying out that you're like, I want to make this work. I like the way that this works. I like the teacher who taught it. Maybe I jive with them. If you have something, you need to be able to look back over your trades to find out what's working and find out what's not, and find ways to manage not doing the things that aren't working. I think I said that right. Double negative, maybe. I think you understand what I mean, though. So let's keep it simple. This is very simple, and you can have complex if you want, but right now I want to keep it simple. So come on over, hit my Discord, shoot me a message. I'll answer you. I answered somebody else in the Discord not too long ago. Sent him a video. He had a bunch of questions, and I just hopped on Zoom, recorded probably, I think it was like a 30-minute response to a lot of his questions. And he was very, very thankful for the number one, detailed, in-depth response, as well as to be able to take some of the stuff out of it and start applying it to his trading. We'll see how that works. 6 months down the line, maybe a third of it sticks. 6 months down the line, maybe none of it sticks, and he finds a different way to be profitable. Perfectly fine. But if you're looking for some guidance, some counsel, I'm here for you. I will see you guys on Discord. Take it easy.